Hey guys, Taylor with GammaEdge here, coming at you with a market recap for April 24th, 2025. Nice recovery day by the bulls. We'll get into our market trend model here in a minute. One thing I want to know tonight is I'm not going to go through the pre-market prep as in-depth because we already do YouTube videos on that every morning that we post, right? So you guys can go back and review what the pre-market thoughts were. If you want me to keep doing those in-depth pre-market reviews, let me know. I can go back to doing it. But here, I'm going to keep it short, focus on the intraday price action. So with that said, breezing through pre-market prep real quick that we do in the Discord. Market trend model, the thought was, 2 days ago we had a nice linear up day. Yesterday, kind of a failure, disappointing day. So today was kind of a make or break day. What I said in the pre-market note, right? I thought today was a pretty important day just because, had this failed yesterday, so critical to see the bulls, either reclaim that back moving lower or look for a waterfall, which again, took out the lows yesterday. That would not be an encouraging sign for the bulls. But, newsflash, you guys are watching this after market close, and we know that prior day highs were taken out, so that was a great sign to see. After that, just quickly going through the different SPX option market overviews. Again, quickly, we just focus on the SPX option market because it's the largest, most liquid options market, and the option market is inherently forward-looking. So by looking at the SPX, we get a great understanding of how, broad strokes, how the broad market is positioned on a forward-looking basis. So starting with SPXA, below spot price, becoming call dominated, above spot price, still predominated, but net improving day over day, which is good to see. Looking at SPXP, we were call dominated above below spot price from the distribution of this net OI perspective, but net delta above spot price still has some room to improve. This simply just means that while we have, calls dominated above spot price, we just need more magnitude of calls that will flip these net deltas to positive. But net, this is still constructive to see. From here, the transition zone was 41.15 to 43.35, so this was quite a wide transition zone. But we were able to break through the top of the transition zone, finished on the right side of that. So again, encouraging sign for the bulls after the session today. And here, just going through the SPX 0DT structure to start the day. This is what it looks like on the price chart. Just going through how we get these levels from the options market. Key ones, so the DEX transition, that was 53.85 to 53.35. You'll see this was important because we opened right at the top of DEX transition zone, chopped around there for a little bit, and then got a nice continuation move higher to the top of the iron condor. That structure was present today. I think he was there yesterday. He's there again tonight. Hasn't been here in a while, just given how much volatility there's been in the markets. Makes sense. So if you're not familiar with the iron condors, a lot of people on Twitter talk about it. We have a YouTube video, discussing it as well. It's effectively just a trader. You can see, he was the size of the structure was 11,000, I think is what I saw, and it can have an influence on the structure. So it is just something important to be cognizant of on when it is in the structure, especially when it gets quite large. So yeah, anyways, the top of the transition was 53.85, top of the drunken sailor range, corresponds with the top of the iron condor, which was 54.50. So what does all that mean? All that effectively means is between 53.35 and 53.85, kind of a no trade zone. Reason for that is because there's a back and forth between call and put speculation within that zone. So we see a lot of chop occurring there. Above 53.85, we were biased into the top of the iron condor, which was 54.50. And then if we were able to break to the top of the iron condor, then we would be, encouraged to see even further price action. All this is dependent on intraday volume analysis, making sure we continue to see that call speculation higher. Then right but below the DEX transition, then we were, more favorable to the downside. So with all that said, I have those levels here drawn out on the chart as well. So this is DEX transition zone right here, top of the iron condor up here, bottom of the iron condor here. And then, just quickly turn it on, just some simple indicators I use just for trend purposes. The important call out here is the blue line. That's the opening print. That is just a key reference point that I personally use in my trading. That's not necessarily a GammaEdge thing, but I find it useful. So again, that's kind of a key sentiment point on the day for just the way that I trade. But nonetheless, there was a good confluence this morning between the top of the DEX transition and the opening print. So it comes to a little, this is a 5-minute chart. Here we have a 2-minute chart. You can see solid consolidation here, towards the opening 10-15 minutes. And then we got that nice push above. That was an easy entry for myself to take just because it was clearly defined risk. If we lose the opening print, lose the top of the DEX transition zone, I would have stopped myself out low of the day because we would have been square in the middle of the chop zone, which is in the middle of the DEX transition zone, not somewhere I'm interested in transacting. So this was a very good risk to reward. And then, right, if you could hold it to the top of the top side of the iron condor, that was kind of a natural profit target. And as you can see, that's the reason that we identify these levels in the pre-market and we mark them, just because we could see, again, a lot of interaction with that level that we do see a lot of times when the structure is present. So, right, that was kind of a layup. And then as we look at the market trend model, this just makes today's trading even easier once we broke to the top of the DEX transition zone. Reason being for that is we just saw kind of another linear update. After we saw this, we saw a nice continuation higher again today. So that's exactly what the bulls wanted to see. After kind of a little bit of a hiccup yesterday, seeing them reclaim that today was a great sign. And again, we finished above the high of yesterday, I believe, too. So that is an even better sign. And then filtered tick wise, which again is just our measure of significant buying and selling in the market, that did progress higher as we went throughout the session. So again, net market trend model is looking really good here. Last thing want to review real quick because it's important. It's the backbone of our SPX 0DT futures kind of intraday trading strategy is our volume analysis. The key chart that we use there is the volume momentum is what it stands for. Quick background if you guys have not been watching any of our post market videos. Effectively, what we do is on a 5-minute basis, we aggregate all call and put volume separately. We figure out those distributions. We find the midpoint, which is referred to as a centroid. We plot those centroids throughout the session, connect the lines for you, which are the solid green and red lines, and those create the trends that you see here. So the idea is from the open until any point in the market on a 5-minute increment, we can understand what those centroids have been. So like just as an example, from the open to noon, we can see the centroid pattern has been this, which is sideways to higher. So assuming all things equal, we can project out what that behavior of the centroids is going to be throughout the session. And this is important for two reasons. A, we can understand the character of price action, which is either choppy, trending higher, or trending lower. Because remember, it's our belief at GammaEdge that transactions follow out of the money speculation. So is call speculation throughout the session moving higher, moving sideways, moving lower. Same thing with the put side. Put speculation moving higher, moving sideways, or moving lower. And so with that, again, we can understand the character of choppy versus trending price action. Then we can understand all else equal where the likely path of those centroids are, which again, price is going to follow. So I will go to a real-time example with what it will look like intraday so you can understand the utility of it. But just looking at the post-market recap, again, the put centroid was moving higher all session long, which that tells us, okay, no risk of really a waterfall move lower. Can't predict the news or, any tweets or anything like that, but just strictly looking at the data, there was nothing today telling us that the market, was for whatever reason was going to collapse lower. And then looking at the call centroid side, we could see again that there's a nice kind of gradual sideways to higher. And so all else equal, the general signature of kind of an up move is that the put side aggressively higher and then the call side, sideways to higher as well. Keep in mind when as in this example here, when the call centroid is kind of flatter as opposed to trending, significantly higher, we creep into those kind of at the money deltas. What I mean by that is, so these transactions here that transact in kind of in the morning to early afternoon session, once we started to get to this point here, you could see the midpoint that these were starting to get at the money. So what that means is when price was down here, these transactions were put on. Now they're at the money. There is significant gains that were made because they went from out of the money to at the money. And so that's a kind of a natural monetization point. So when we start to get to this 50 delta line, that's kind of a cap on the move, so to speak, is what we see, unless we continue to see aggressive speculation higher, which is what we did not see today. But nonetheless, exactly what you wanted to see. You got the move higher into 54.50, if you remember, which is the top of the iron condor. And then we got a little bit movement higher outside of that. And now just kind of taking you through different ways that you can use this. So this is what the view looked like at 2 o'clock. We can see, the call centroid side, while trending higher, there's not really a lot of, gusto or oomph moving higher. So again, this is important to know because, depending on your trading style, if you're a call, um, not a call. If you're a credit spread seller, these centroids are useful because understanding kind of what the character price action is, selling on the top side or the bottom side makes sense. Or even, if you're just able to eliminate one side of the market. So again, we know today is a sideways to higher day. So many times we kind of get moves lower. For scalper, good spot to get in. And obviously depending on your system, how you get on your entries and exits. But just in terms of taking out one side of the market, on those dips, sell credit spreads below or whatever, play for that pop back up. You get what I'm saying. But again, whether you're a directional trader, you're a chop trader, you're trading futures, you're trading options, selling options, whatever, these centroids are extremely useful. And one other point I wanted to make, I know that people like to play, butterflies, iron condors into the close, stuff like that. That's really where these centroids come into play. Because right here, we're projecting the call centroid, up to 5508, put centroid up to 5450, we'll just call it. So the midpoint would be 54, 70, 5480, something like that, right? And so another key thing to know is this chart. The main thing to look at here is what this is measuring is the rate of change of the lines of best fit. And those lines of best fit are the dashed lines here. So when we have a rate of change of 0, that means that all else equal, nothing is going to change. So yeah, the centroid should continue to trend along the line of best fit, and that line of best fit is expected to stay the same through the close. So if we were to, price was or the centroids were to make like a massive move lower, that is going to change the lines of best fit to start, moving lower and lower and lower. But through the session at 2 o'clock, it was indicating that those lines of best fit, we're going to go there, and price we're just going to continue to follow those guardrails. So that's kind of a good way, again, playing iron condors, playing butterflies into the close, and good stuff like that. And then last thing, something else that's useful I like to look at the end of the day is just this GIF we stitch together of our 5-minute 5-minute charts that we automatically produce throughout the session. We can just see, how we were getting those move higher, and then eventually, those lines of best fit were really starting to flatten out. You can see how they remain steady, which goes back to my point of the iron condors, the butterflies into the close, all that good stuff, and just understanding. The key for this, at least for me, is just really keeping me on the right side of the market, right? Like in golf, if you draw the ball, it helps eliminate the right side of the course when you're teeing off, right? And the same thing with the volume chart. Like we're just wanting to eliminate one side of the market, pairing that with the market trend model. Today was easy to eliminate the short side of the market. Yes, you can, try and do intraday scalp short, but that's not the point. We're trying to catch the meat of the trend on the day. Trend was higher. This really helped us kind of identify that trend and catch it. So with that, you guys have a good night, and best of luck Friday, tomorrow, finish strong. Thanks. Bye.